Right guys, so today we are going to go through candlesticks. What are Japanese candlesticks? How can we use them? Is there an edge in the market of knowing what different types of candlesticks there are? Indeed there are. So let's jump right into it. Now, I'll briefly go over this PowerPoint with you guys so you can read it and stuff. But I'll cover the baseline and then we'll switch it over to the chart section. So Japanese candlesticks were invented by somebody called Homo Munisha. I think that's how you say it, Moonhisa, I think that's it. And he was one of the most successful traders in history. He made over $10 billion. And pretty much that's about it to him. So let's get right into it. Now, I'll brush over this briefly with you guys, and trust me, you can read all of this as well. By the way, everything's here. It's pretty self-explanatory. Overview, candlesticks anatomy is what we're going to do. I gave you a bit of an anatomy, and candlestick patterns, you can always use them in your trading. And market structure, will go through time frames, trading strategies, etc. Money management, history of candlesticks, everything's here. So I will let you guys read the majority of this, but if we do start now, we'll brush through all of that backbone and we'll start straight into it. So what is a candlestick, right? Japanese candlesticks are formed using the high, low, and the close of the chosen time frame. So whether you be on the daily, 4 hours, 1 hour, 5 minutes, etc. Now, here we have the actual body, lower shadow, upper shadow, high. The high represents the wick. The close of this opens, so price will open here. This will be the close. That's the high that was made that day, and this is the low. So again, you have buyers and sellers fighting it out. Vice versa to a selling candle. Bullish, selling, bearish. All right. Again, I go over it here. You can take time and read all of this. And long versus short. Again, you may have different sizes, different shapes of candlesticks, but majority we do go through in here. Long bodies refers to strong buying or selling pressures. There's a candlestick in which the close is above the open with a long body. This indicates that buyers are stronger and they're taking control of the market during that period of the time. Vice versa, if there's a bearish candlestick in which the open is above the close with a long body, this means that the selling pressure controls the market during the chosen time frame. Now, let's talk about candlestick shadows. What are these long tails? When you see these hammer candles, etc., what are they? Now, Japanese candles with short shadows indicate the most of the trading action was confined near the open and close. If a candlestick has a longer upper shadow and a short lower shadow, this means that buyers flex their muscles and bid price higher, vice versa. Now, if a Japanese candlestick has a long lower shadow and a short upper shadow, this means that sellers flash their washboard as and forced price lower. But for one reason or another, buyers came in and drove price back up to the end of the session near its open price. Now, that's the brief of those two candles. I kept it short. We will go into charts and look at candlesticks. Now, candlesticks are very important, the most powerful trading concepts. They're very simple, easy to identify, and very profitable. Some traders say you don't need to look at candlesticks, some say you do. Well, I'll let you guys be the judge of that. Now, let's jump into it. I'll let you guys read all of this as well, by the way. Now, we're looking at current today. What are these candles? We can see how markets have been moving here, these long candles here, these full body candles here. Now, in this economic environment that we're in with high inflation, war on the rise, etc., etc., you're going to get a lot of panic and you're going to get a lot of strong moves between buyers and sellers. So let me just turn this off and let's have a look. So starting from here, let's see how price did it from here. You can see these are full body strong candles. Now you can see buyers are pushing price high, whereas here we came into resistance where buyers tried and sellers pushed price back down. It's literally buyers and sellers fighting out. And you can use this because what does this indicate to you? If we're in the daily time frame, the cleaner charts, this indicates that there are more sellers. Buyers have been taken out at this specific level. Sellers are still winning. You can see what happened the next day, price sold off. Now, vice versa that, when you get candles, for instance, as this one, where you can see buyers have been pushing. Remember, this candle before was previously red with this long wick downwards. Now buyers have pushed it, which shows immense buying strength in the market. That then you could use that as a trading bias and say tomorrow possibly could be buyers in the market, and you can see buyers did maintain that level until we came back up to this area of resistance and sellers again came. But if we look closely at the next candle, which is this red one, we can see sellers and buyers were fairly close, but sellers did win at this strong level. And again, you can see sellers pushing price, but buyers taking over. I use candlesticks as a measurement of seeing how buyers and sellers are fighting in the market. But here, buyers did come in stronger, but then sellers are still keeping price down. So who's going to win, right? And then that's where you incorporate your own technical analysis and etc. and follow the market through that way. But that's about it with candlesticks. There's nothing too deep in it. You can look at different types of candlesticks patterns, from dojis to these morning stars to these these ones here, where we've came to a strong area and sellers have pushed price down. Like, you can also look into stuff like this, these full body candles, for instance, like here, that indicates a very strong amount of sellers have come into the market, vice versa to the bull candles. Remember, if the candle's fully closed, full body closed, it shows an immense strength. Now here you can see price pop super down. Sellers push the buyers back down. And this normally happens at good areas of support, resistance, supply, demand, etc. Now if we go on the weekly, you can see a bit more. Now the weekly, for instance, buyers came in at this level, this hammer candle. You can see how candlesticks are moving a bit more better. And you can use this, for instance, like if we talk about this week here, this long hammer candle. Now, do we have it in our chat? Not this. Let's go here. Long shadows and long lower shadows. We do talk about it. And if a candlestick has a long upper shadow and a short lower shadow, this means buyers flex their muscles. But for one reason or another, sellers came in and drove price back down to the end of the session. One reason or another, that mainly being technical, right? And what areas we are on the market. For instance, this is what sellers did. They flexed their muscles. Price 1, 2, 3, 4, 5 slam down. 5 weeks of slamming down. And you can see here, buyers did try to step it up, but sellers said nope. We are still continuing lower. You can see this long wick, and that again shows you that sellers are still in the market for a longer period of time. So guys and girls, if you want to learn more about candlesticks and stuff, obviously we'll be doing more in the Discord. And if you want to know a bit more, you can ask me in the Discord chat. And they're fairly easy. Again, the best way to learn this is on the higher time frame, the weekly, the monthly, the daily. They have the more cleaner candlesticks. And once you get better at looking at candlesticks and seeing them, don't have your trading bias on all of this. Right? Don't have it as your main strategy to trade on candlesticks. Incorporate it. That's how I do it. And you guys could hopefully do it as well. But any more questions, feel free to give me a text or chat in the Discord, and we can go over it as many times over. Thanks for watching, guys.